Hey guys, what's going on? It's Rekt Capital and welcome back to the channel. Today we're going to be talking about a free newsletter that I posted earlier today in the Rekt Capital newsletter. We're going to be focusing on some of the things that I've been touching upon in that edition. We'll be talking about how Bitcoin has rejected from this major resistance and where could this Bitcoin retrace go to. Subscribe to the channel for more videos like this in the future and let's dive right in. Before though, let's talk about our quick sponsor. This free edition of the Rekt Capital newsletter is brought to you by Ember Fund. There has been an explosion of powerful DeFi products, but investing, managing, and understanding them continues to be difficult, and Ember Fund changes this. Ember aims to be the easiest place to invest, learn, and participate in the upside of DeFi, NFTs, and the broader crypto space through institutional-grade strategies. Invest in a portfolio and join the 60,000 investors around the world who have transacted over 500 million on their platform. Sign up today and earn Bitcoin by learning about crypto daily. Check out the link in the description below to sign up to Ember Fund today. So let's dive into today's video. And you can see here that Bitcoin has rejected for the 5th time from this major resistance area. 1, 2, 3, 4, and this is the 5th time. And I talk about the commonalities, the recurring themes in these rejections from this major supply era, because fundamentally we want to learn about whether this supply era is actually weakening. So what are the signs that we need to pay attention to find out more about this weakness? So let's dive into the historical rejections from this major resistance. You can see right over here, 26%. Right over here, 18%. This third rejection, 27%. And of course, the historic minus 52% correction to the 29s. So this is the 5th rejection. And what should we anticipate going forward? Because if we want to learn more about a 15% rejection, then that would be a shallower rejection, right? Because historically we've seen minus 18, minus 26, minus 27, minus 52. So a minus 10% to minus 15% pullback would bring us to these two major support levels that are outlined right over here. So a pullback to 49k would be a 15% retrace. And if we do bottom there, that would be a great argument for this retrace being shallower than the previous rejections that we've seen from this major supply area. And that's where we could be confident about a potential weakening of that resistance occurring. But where has Bitcoin rebounded from on these similar rejections? You can see here that it has rebounded from the 51,200 level, which is this red horizontal right over here. We've seen that on this retracement. It's also rebounded from the 49k support area, but also even lower than that, 30 or at least 43,700 to 46,500. And these are essentially the 3 demand areas that we should be watching for should we anticipate a stronger Bitcoin rejection at these highs. And if we do get a minus 10% rejection, then we'd revisit the 51,200 level, much like we saw back here on this rejection. If we were to see a minus 15% rejection from this major supply area, we'd revisit 49k like we did back here in around April. And if we were to see a minus 25% rejection, that would bring us back to this orange area, the 43, 46k area, like we saw back here. But the thing about this minus 25% retracement is that this was a minus 25% retracement in September, August. So another 25% retracement doesn't seem very likely, though it would be historically accurate by standards of history, because we've seen, if we cycle back to all those retracements in the past from this era, minus 26, 18, minus 27, and minus 52. Of course, minus 52 is quite unlikely because when we see such a crash from such a major supply era, then those sell side orders have been fulfilled. And you can make a case for this sort of rejection having satisfied a lot of the sell side pressure here, which is less likely to get repeated should we see a stronger rejection from there. In any case, we're watching out for a minus 10 to minus 15% retracement because that would satisfy the narrative of a weakening major resistance area, which is what needs to happen for Bitcoin to be able to press past that supply area and break to new all-time highs. So having said all of this, we have to still bear in mind that the Bitcoin macro uptrend, or at least the downtrend, the multi-month diagonal trendline resistance here is over. Last week we really breached that area easily. And the thing with these sort of trend lines is that Bitcoin can pull back into those trend lines and test them as support for a retest to turn an old resistance into a new area of support before springboarding into new trend continuation into a new uptrend. So the old downtrend is over, a new uptrend can emerge, and you can see that a retest attempt would bring Bitcoin to 50k roughly speaking. So you can see that there's quite a lot of confluence overall in this region, the 50k area, which would be the retest, the 49k region, which we mentioned earlier, and the 51,200 area. Lots of confluence in these low 50s, high 40s, and it's really important that all in all, market cycle analysis suggests that the downside is limited for Bitcoin in the month of October, and that price will try to close above 55,200 in an effort to just preserve historical mid-cycle price tendencies, because that's what's needed for Bitcoin to break out to new highs over the coming weeks and months. In any case, that was the free edition of the Rekt Capital newsletter. If you enjoyed this one, feel free to check out the newsletter in the link in the description down below. Sign up for $12 a month for more unbiased, neutral insights about Bitcoin and other cryptocurrencies. In any case, that's about it for today's video. Thank you so much for tuning in today. Subscribe to the channel for more videos like this in the future. Like the video if you enjoyed this one. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.